Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're going to be taking a look at one of our top 5 in the S&P 500 today. We're going to be taking a quick look at Microsoft, Msft ticker, and we're going to start with our classical analysis first, and then we're going to come in and have a look at the two counts. So, we're here on the daily time frame. We're just going to back out to the weekly time frame. And we're just going to bring up our exponential moving averages here, the 60 and 250, 60 in orange, 250 in green. And we're just going to bring up our indicators first, I think, to do this. So, we've had some weekly bullish divergence in the MACD between the lows of June and the lows of October. We've had some weekly divergence on the RSI between the low set in May and the low set in October. We can see that we've got higher lows here, lower lows here. So we've got some bullish momentum and strength underlying this move lower. The move up in the histogram on the MACD over the short term has been a weaker bullish move overall than the summer rally into July. But the bearish move down recently was generally a little weaker than the sell-off prior to that summer rally as well. 60 exponential moving average is now rolling over and has provided both support and resistance, so it's been back tested. So we had support here, we broke the level, we back tested it, came down, came back up, back tested it again, came down. We haven't made it to the 250 exponential weekly average yet, but we may do if we're going to get another thrust down. Now the OBV is still accumulating bearish volume overall, series of lower highs. Any rally that we see that breaks the sequence of lower lows and lower highs in price structure, we'd want to see bullish accumulation of volume to help support the break of that trend, which has not occurred yet. So we're still in a downtrend, that lower lows, lower highs. Till that breaks, we can't really jump to any conclusions. We may have a low in place, but we haven't got much support or much proof for it yet. So on that note, let's just have a quick look at support levels and resistance levels. We can see that essentially we've come into an area of support between these highs here and this high, this high, this high, these series of little highs and this little back test here. It's all in this range, 215.18, and we've basically found support there. We can see if we bring up our FRVPs for a minute, we've got our visual range on the right hand side here. And let's bring up also support and demand. So we've got a series, some volume here, point of control, move up, move back, found buyers, 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 and then finally back tested this area and moved to a new high. So we've got some demand in here and a support level, and you can see we've got this little node here on the visual volume profile, and that's where we've come to, and we found the low for the moment, but we haven't broken this sequence of lower highs and lower lows. So still in a downward trend. We've come to an obvious support area. We've sold off a significant amount, not as much as some of the other top 5. Tesla's been hit the hardest out of the top 5 we're covering. Microsoft, I think, has gotten off the lightest. It may be competition for Apple for that, actually, in terms of who's gotten off the lightest here. If I just have a quick look at the overall decline, 38%, 39%. So I think Apple actually got off lighter overall. But essentially, once we see a completion of this downward trend and a reversal, we can start to make a few assumptions, or we can start to have a few ideas at least. We can either come to the conclusion that whatever this is, it's over, and we bottomed here, or if we get another zigzag down, we bottomed here. But once we break this sequence, we can say, well, that's over, so now we're going off to new highs. Well, that's possible, but it's also possible that whatever this is on the longer term time frame, this first move down when it's complete, is the only thing that's actually complete, and we simply get a corrective move, which could be to here, could even be expansive, and then we continue a lower trend. So what I'm saying is, from a trader's perspective at the moment, there will be an opportunity when we see 5 up and 3 back, move off of a low supported by volume, supported by momentum which breaks trend, that's going to offer an opportunity to trade into that retracement. If that's all it is, it could be more, it could be off to new highs, and then there might be an opportunity again to the short side in the future. Okay, so we're still just waiting for the market to turn around and to give us some solid evidence. We have a count. I'm not happy with the move off of the low as a bullish move, so I think I'm favouring the bearish count for the moment. I think it makes a bit more sense. But as you can see, we've done that round trip on the weekly time frame. Okay, in the weekly RSI from oversold to overbought back to oversold. Bullish divergence on the weekly time frame on the MACD and the RSI, suggesting that there is some kind of rally coming. Perhaps a counter trend rally, perhaps something more significant. That doesn't have to play out. Strong divergence, bullish divergence on the daily time frame tends to influence price more considerably over the shorter term than these longer term weekly divergences do, but they should be paid attention to. We should not ignore them. Okay, so we're just now going to switch the chart into log for a moment so we can get a better look of it over the weekly time frame. And we're going to take a fib level here, fib retracement level, excuse me, for a wave 4, and we're going to switch this into a linear reading as opposed to a log reading. This is purely a function of retracement in price. So we've got what I'm saying here, this huge pivot going back to 1999, this massive free wave correction which takes us all the way to the GFC 2009. This huge pivot here is a larger wave degree, and everything here is contained within the wave degree to follow. So if this is 1 into 2, this is all 3. Okay, and I've got this as 1 and 2, 1 and 2, 1 and 2, 1 and 2, 3 and 4, 3 and 4, 3 and 4. If I just show you the simple count. So I think we're in this primary 4. Now it could be cycle 4 to go with this cycle 2. However, because we're talking about the price being all the way back down here, anywhere between $14.76 and the highs of $32.90, if we take that pivot from either the bottom of the wave 2 at cycle degree or the wave 2 at primary degree, you can see it barely adjusts at the top end here. So what we're saying essentially is, taken from primary degree, we've come to the 38.2% retracement in linear terms, which is a typical wave 4 retracement. We can see how this is a level which has been interacted with. Here's the 23.6. This first operated as resistance, support. The first opportunity for the price to really find some support, it didn't, and it was back tested before being broken, and then we've moved back down to the 38.2 into all of this support I spoke about here. So there is potential for the low, but this could easily come back to a more to another wave 4 target, which is the 50. Right, 23.6 and 38.2 are more common, but the 50 can occur in a wave 4 as well. There's also the possibility that if it is a larger wave degree, this could be the first move of a much bigger structure. Right, now we're not psychic, we'll never know that. So now let's come in now and focus on the smaller time frame and how this thing looks and what we want to see going forward, and we'll look at the Elliott wave counts. Actually, before we come in and look at this smaller bit, because I don't want to forget it, let's just zoom out and have a look at that long-term pitchfork I spoke about, that long-term piece of geometry. So it's in that pitchfork folder, super cycle 1, 2. What I'm going to do is I'm just going to add the 23.6 to this and use this 25. Changes my little red spotted line. Okay, so it gives us a little bit more, subdivision, or well, not subdivision. What am I talking about? More of a fractal nature to the pitchfork. What I find interesting here is how we've just tagged the median line, right? Since 2009, the GFC, we've come up to the median line. So, assuming that major pivots within a pitchfork will occur at major levels, so the outside bounds and the median line are your first major levels. Then you've got priority to the golden ratio after that as your next major levels, and then you've got your internals of 38.2, 23.6 and 50 at lesser values, of lesser importance. We can see how the first real move up in this larger pitchfork was to get above this golden zone, 61.8%. Okay, and this is where we did it, and we back tested it several times, okay, before we made that next move up. Okay, so let's just delete those. From there we went straight to the median line. We did tag around the 23.6 with this high here, and then we came straight back to the 50 here. This is COVID. 23.6 to 50, significant drop, but we went level to level in this long-term pitchfork. We then came to the 23.6 where we snagged around for a fair old while, and then we got a nice clear obstruction-free impulse into the high, which was basically the median line. From there we've come back to the 23.6 down, and then down to the 38.2, which we're kind of hanging around at the moment. We've also got the 38.2% retracement for a potential wave 4. Long term, I don't think I can be anything other than extremely bullish for Microsoft. I don't think that's a massive surprise, really. But if this correction here is a 3,346 day correction, there will be in the future another correction of similar proportion. Okay, and essentially what we'll be looking at when that day comes will be something like 1, 2, 3, 4. Okay, dwarfing everything we're currently in. So I don't feel that the current correction we're in is some kind of 4,000 day monstrosity at all. I think it's part of probably the structure like this. Okay, so it may feel like a big time frame at the moment, but it's really not. Even doing something like 3 down, 3 up, 5 down to the golden zone, you know, that if we did something like a flat here, that could still be over 1,000 days, but it's still a fraction of this huge move back here, like less than a third of this huge move back here. So just keeping things in perspective, pitchfork is definitely in play, and we are definitely playing with these levels. It's very common to work your way up to the median line of any pitchfork, pull back from it, and then start to figure out how to get above it, back test it for support, and then continue to move higher through these levels into the future. If that's what we're going to do here in Microsoft, then we've got a very bright future in the long term. So there you go. I just wanted to share with you. I'm not saying it's a great way of navigating the market, it's just far too macro, it's far too big. I just think it's interesting. So we'll come down now and we'll zoom in on the shorter term, and we'll get on with our short term analysis and Elliott wave counts. Okay, so here we are on the day time frame, looking at the more recent price action since the high. Let's just bring up our EMAs first. So we had that death cross of a 60 through the 250, resulted in a very temporary low here, but generally one of the cases where it's actually just generally more bearish. We've since moved down lower with the 60 tracking as resistance, test here, come up to the 250 to test that, found resistance, thrust back below the 60, and heading back towards the 250 again. So generally looking bearish. 250s rolling over and heading lower, 60s rolled over and heading lower. Any thrust out of this trend would probably drag the 60 back up higher, obviously. Then we'd be looking for the first cross back over the 250 since the bearish cross back in April last year. If we look at the trend that we're basically in, we can sum this up using a regression trend here. Let's come off of log. Now this is just taking the high to the most recent low, not taking all the current data into account. I prefer to do that until the recent low gets broken. Okay, because then I can move it to the next low and accommodate all the data from swing high to swing low. Now you might say, well, why don't you just take all the data up to the present day? The reason is I'm trying to identify the possibility of a trend change, and if we basically go from a high to a low and we take all of the data in that set between that high and that low and put it within a regression channel, any move which takes us out of that swing high, swing low will be breaking that trend, and very strong, and a pretty strong sign that we bottomed back here, at least temporarily. Whereas obviously if we continue to expand the data set indefinitely, all we do is increase the 2 standard deviations from the mean indefinitely as well. So let's just do that now to prove my point. So now we clearly are well within the trend again, well within this downward regression channel. So it just appears that we're going lower. So I like to use that technique to try and give me some kind of forewarning that maybe we found the low, maybe we've bottomed. So I'll move it back to that low. You can see it tightens it up somewhat. And if I want to just look at the overall trend, I'll use a trend line or I'll use a parallel channel. So on that, and I'll use a pitchfork as well. So if we take a parallel channel and we just go from the high here, and then we go to what we consider to be the equivalent A wave or Y wave, depending on whether it's a zigzag or a double zigzag, and then we move the top down to the requisite B wave or X wave, tighten it up like that, and then we've got a channel which contains all the current price data based on linear measurements rather than log measurements here. So making it simple, we're basically saying A to the bottom of the channel, or Y, or W, excuse me, and then we're saying X or B, and then we're saying potentially Y or C, or we've got something like this going on. Looking to get to the channel, we've got another zigzag in play. So first of all, let's have a look at the bullish count. Bullish count says that this close touch of the channel, not quite getting there, is enough to say three wave swing. Okay, and we've got W, X, Y, X, Z, double zigzag coming, triple zigzag coming down here. Now that's all well and good. The issue is getting off of the low. Okay, we get this short stubby wave C. Let's come down to the 4 hour now, and let's come all the way down to the 1 hour actually, and then we get this move off of the low. Now this is a pretty shoddy looking impulse, and therefore I'm going to favour the bearish case rather than the bullish case because of that. So we can really only look at this a couple of ways. We can either say 1, 2, 3, 4, 5, and that's your impulse, not particularly attractive. From there you get A, B and 5 waves down and a C. Well, this becomes highly expansive as a flat. It goes beyond the 2618. Don't really like that. And if we take the length of the B wave as well, from there we get the 1618 with the most expansive extension we would expect to see in the B wave. That's tolerable, but the move down in the C seems too much to me. So I don't like that idea for an impulse. Doesn't look right. So the only way I can get this to fit, where I can get a correction that makes sense, which looks like a zigzag, is to try and aim for the actual high here. And the only way I can really get up there is to say a teeny tiny 1, 2, 1, 2, 3, 4, 5 into 3 at minute degree, A, B, C running flat 5 into 1. Do we really like the look of that as an impulse? I'd argue no. I'd argue they're both shoddy looking, and I think overall this feels more like 3. Okay, so whether we come to here and we get that running flat and then into C, so A, B, C running flat in the B, I think that still looks better than trying to get this to be 5. Okay, I'm not saying it's impossible. I wouldn't have labelled it if I felt it was impossible. I just think it's very low probability that that's a sound impulse. So, but essentially we have an invalidation point here at 213.43. So if we break that with another move lower, we can just delete this and we know that this count is incorrect. Okay, we can continue to move lower in this channel. Now the bearish count looks at this as another corrective swing. Okay, into another X wave, and now we're thinking 5 down into an A, we're going to get a B, and then we're going to get another 5 down in a C to complete a Y, and we're going to try and touch the bottom of this channel more precisely, get a more significant breakdown. Now that's just a polygon line I've put on, it could be anything. So let's just label this now, and let's just temporarily say A, B, C. Okay, because I think that's probably the best fit overall. Change this to minute degree, or minuet degree, excuse me. I think 1, 2, 3, 4 and 5. So that becomes sub-minuet. Bit of a weak 5. A, B, C running flat, 1, 2, 3, 4, 5. Possible truncation in the 5th of the C there. or maybe 1 2 1 2 3 4 3 4 5, whatever. 1 2 3 4 and 5. And then now this, in fact, you know what, I think I'd actually rather go 1 2. Let me have a look. Let's come down to the 15 or 30 minutes, see what we can get out of this line chart here. 1 2 1 2. It could actually be all corrective, or maybe, no, I don't think that's a very attractive looking diag, do you? It doesn't really look nice either way, does it? So I'm just gonna, I can't quite pick apart. There's a 3 in this gap, I think, is what's going on, and it just happened and we gapped up, so I can't actually label it. From there, what have we got? Well, seem to have an impulsive move here, so I am going to go with that. I'm going to just go with that truncation for the moment. I think that's 5. Tricky because it does look like another zigzag, doesn't it? I want to go 1 2 3 4 5, but it does resemble a zigzag. I'm not so sure about that top, to be absolutely honest with you. It's very difficult to pick it out. 1 2 3 4 5, A B C. Does look like a zigzag, doesn't it, guys? So makes this a bit problematic because that doesn't look like an impulse, not really, in my opinion, and that doesn't look like an impulse either. That looks more like a zigzag. 1 2 3 4 5, A B C. 1 2 3 4 5, 1 2 3 4 5 off of the low. 3 followed by 5 is going to be 5 within a larger 3, unless it's part of the flat. So that is probably not done. Wants to come higher after a little correction, perhaps. Bit tricky. Very tricky at the moment. I'm going to give that the benefit of the doubt, though, of being 1 down, okay? So 1. This is going to be A, B, C, probably a deep 2, 3, 4 and 5 to come lower within the X wave. So these will be within the Y wave, so these will be minute degree corrections. Thinking that we're going to get a zigzag into here. No, I don't like that. You can tell I am actually just doing this on the fly because I'm just trying to... That's going to make that A wave of the last ABC far too big, in my opinion. So I think that's probably 5 just into A, B, C into B, and then we're going to get 5 down in a C. So we'll go with that instead, which means this has to be 5 down, okay, to get that A. So 1, 2, 3, 4 and 5. We'll bring that into minuet degree. This does look like 5. 1, 2, 3, 4, 5. So maybe we're getting A, B, C, zigzag into B, and then we'll get 5 down for C. I'm going to leave it like that for the moment. So invalidation for the bearish count, a trap between these two levels, is 263 spot 92. That can't be another A, B, C from this pivot here if we take out that 263 spot 92 level. So let's gather all this up and put it in the bearish folder. Okay, and the bullish invalidation point is here at 213 spot 43. We can't be 1 and 2 off of this low if we come back beyond this level. Great then. So what can we do in the short term? Well, if you're more of a day trader, a short-term swing trader, you've got an impulse off of a low. So you've got a potential trade with momentum here that you can do. So if this is 1, 2, 3, 4, maybe you're coming into a diag, you're going to be shrinking this down to a smaller degree. You're going to be throwing a channel around it. Okay, and you're going to be looking for this thing to complete. You're going to be looking for signs of weakening on the hourly. Let's come out to the hourly first, and then down to the 30-minute and smaller time frames. You've got some weakness between this top here on the RSI and a lower high and a lower high. You've got some weakness on the MACD, so perhaps that's an early sign that we're slowing down here towards a high. Maybe we've got another pop up to the top of this channel, but essentially what we're looking for is a break of this channel, weakening momentum, and then a reversal to occur. Okay, and then we're going to come back probably in 3, break this channel. This will be an opportunity, if you want it on the shorter time frame, to perhaps trade that C leg if this is truly A. It could be 1 into 2 if that bullish count is correct. We've got 5 up, so we're looking for 5. We're looking for this to weaken, to slow down, to reverse, all those signals that we'd be expecting to see. And then once it's retraced, we can set up our retracement. Once we've got a high in place, we can set up the golden zone or the STS if we want to use the 38.2 down to the 78.6, and we look for some kind of retracement into this value zone, right? And then you're going to be looking for a reaction from here to trade higher, and that's essentially 5, 3, 5, which could be 1, 2 into 3, or A, B, C. If you're not interested in doing that kind of thing, you could shrink this down much more and do this on the minute chart with each of these individual swings if you wish, of course, but that's not my kind of bag. We do have some day traders on the Discord, on our Patreon, who are literally that shit hot at trading 1 minute charts well. I've seen guys do it, but you've got to be able to sit here all day, haven't you? And I just don't have time for that. But potential 5 wave up here, looking for that to break if you want to trade it higher. If you're not interested in that kind of stuff, you need to see invalidation on a larger time frame. You need to see a clearer 5 wave up and 3 wave move back on a larger time frame. You need to break this downward trend. You need to break this trend of lower lows and low highs. So we're a fair while yet from having any real confidence. We haven't seen a nice clean 5 off of a low, have we? It's been a bit convoluted, a bit messy. So in that sense, I'm leaning more into the bearish idea. Okay, expecting to see maybe a small continued high for a bit longer and then another move lower. Alright, that really is all I've got for you guys on this one. It's several of these, obviously, because they're all, you know, huge components of the S&P. Some are getting hit harder than the others, like Tesla, but they're all in downtrends at the moment. And before we can get too bullish, we've got to wait and see something change, essentially on the larger time frame. Something that convinces us that we've got a motive move off of a low and an opportunity to trade it long. In the meantime, short trade setups for the longer term would be to wait for this 3 wave move. We spoke about trading this as a C for the short term traders, but if you want to trade this swing trade as a bear, then you're looking for this to complete and to get those same reversals. You're looking for a move back down, a move back to trade off of short to continue down to the low here. So that would be the way to set it up for the short side. Alright then, either way guys, thank you very much for joining me. If you're new to the channel and you'd like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated, and I'll be back with you as soon as I can. All the best, bye bye.